Well, the head of the Bank of Canada pushed back against the idea of interest rate cuts today, a contrast to the head of the U.S. Central Bank earlier this week. Joining us for more is Warren Lovely. He's the chief rate strategist with National Bank Financial. Thanks so much for coming in.
Yeah, my pleasure, Jacqueline.
So it was interesting to hear from Macklem just 2 days after the Fed's decision, and it has been such an interesting week. It feels like we're in the middle of a sentiment shift, or at least something that we'll look back on to say that's when that started.
Yeah, an inflection point perhaps, or the word that the governor was preferring today, transition, right?
Yes.
2024 is meant to be that transition year. But the contrast, as you point out, between what we heard from the Bank of Canada governor today and what we heard just 48 hours ago from Fed Chairman Powell, really quite striking. You had on Powell on Wednesday doing very little to dampen enthusiasm around a quick pivot, as we say, towards lower interest rates. Whereas today, on Friday, we have the governor, I think appropriately saying, hey, it's still a little bit premature to be speculating about active or quick and easy interest rate relief. We do still need to make sure we secure that victory on inflation.
So why expect that from the Bank of Canada and not from the Fed? Or would you have been expecting that from the Federal Reserve as well?
Well, I think really when I look at this and you look at what other central banks are telling us, the proverbial square peg in the round hole is Powell and the Fed. And in particular, this statement and communications from Wednesday. What you hear from the Bank of Canada, the Bank of England, the European Central Bank, and elsewhere is a little bit more of a balanced or still defensive posture in that, we need to make sure that we really secure this inflation victory. Premature to be thinking about rate cuts. The Fed really went its own way here on Wednesday, and as I say, did very little to discourage this kind of idea or sentiment that we could get to lower interest rates very quickly.
You assume that they do this in a purposeful way, right? They're very careful with their language. So why do you think the Fed used the language that it did this week?
Right.
Because markets were already pricing in cuts next year, and now they're just pricing in way more when you're talking about the U.S.
Well, I think, to be fair, like if we reflect on 2023, and that's to some extent what the governor was doing today as well, it was reflections on the year that was.
Yes.
And if we reflect on the year that was for the U.S. economy, it was a pretty encouraging year in that the economy defied expectations by a considerable margin, and yet inflation relief was real, tangible, and that's a really great outcome for the Fed. Good growth and lower inflation. I think the risk, though, is to expect that we get another easy or uncomplicated year in 2024. So what I also found interesting, the same time today that we have, in and around the same time, we have the governor of the Bank of Canada saying, hey, look, let's just be a little bit careful here maybe. We had other members of the Fed sort of not necessarily contradicting Powell, but also saying, hey, look, it's maybe a little bit premature to be thinking about very near-term interest rate cuts. So again, Powell and the Fed seem to be the outlier here. I think what the Bank of Canada did today is a very sensible speech that outlines progress, acknowledges progress that we have secured, but at the same time tries to manage expectations somewhat.
He was also talking today about needing, more or different sort of modeling to understand the supply situation or supply side of things. I thought that was interesting. And he talked about, that they're going to do a press conference every time that they do a decision. What do you make of that? I mean, I know in the U.S. we get a lot of Fed speak from many Fed speakers, and some people are quite critical of that in the sense of it might be a bit too much. But at every decision to have a press conference, do you think that is a good standard? Yeah.
So let's start with that. Yes, I do. I think that is progress. Look, I think we need to give credit to the Bank of Canada for trying to communicate more clearly to Canadians. They've clearly made this a priority. We'll see what these press conferences look like, but I assume, we have the model. We know, I think doing one of these press conferences at every interest rate decision is the right decision to do. It provides a very timely opportunity to communicate to Canadians, to financial markets, what the statement really is trying to tell you. Because, when you don't have those press conferences right away, you're sort of left almost to guess sometimes in terms of what does that sentence really mean, that adjective? Did that change? Is that intentional? Is it meant to be really informative or not? I think we'll maybe dispel some of the mystery, perhaps, of the rate statements, or half of them anyway, that we've been dealing with in the last few years where we haven't had those timely communications. Now, the other thing you touch on I think is important to highlight as well, and that is the governor's telling us, okay, we need to be doing better modeling or different thinking. And I think the other thing the governor touched on, and I totally agree with this, is have a little humility here. I think it's probably fair to say that some of our economic models aren't calibrated to this type of post-pandemic reality.
Right.
We've seen surprises aplenty in terms of economic performance. So again, a little humility here in terms of a forecast for the year ahead probably is a good strategy as well.
Well, I should just quickly, though, ask you about your forecast for the year ahead. Speaking of that, but when you're thinking about the Canadian economy and sort of how it manages through this period, he talked about there being difficulty ahead for Canadians for the next couple of quarters, perhaps. How do you see it playing out? Where are we this time next year in terms of, economic growth, inflation? How do you see it all playing?
Yeah, so again, give the governor credit for trying to condition Canadians for another difficult year. And I think, that's probably the right way to think about it. I guess the one way to say it, and the way the governor would say it, is monetary policy is working, right? And what that means is that we have interest rates in very restrictive territory. And what restrictive interest rates are meant to do is slow down interest-sensitive sectors of the economy. And you can see it writ large in the housing market. You just touched on housing starts. We're seeing the reaction there. Anything that's got an interest rate sensitive component is under strain. And I think that's going to continue to be the theme here. So what Canadians should probably be braced for is a year of little to maybe no growth whatsoever, rising unemployment, and significant underperformance versus our potential. But look, that's what we need to some extent to really secure price stability. So if the Bank of Canada is genuine when they say we are resolute in wanting to get back to 2% inflation, then we're going to have to suffer through, I think, a tough year.
Yeah.